Here $70,000 is the level where I want to get out, and that definitely also puts pressure on Bitcoin. A $600 gap, a little bit higher to like $58,400 approximately. Time, a concept that seems always to be running against us. And today we're going to talk about $16 billion that are potentially coming a little bit too late into the market to pump us into higher levels. But once this money is entering, we're gonna see a pump like we have never seen before. This is really serious and we need to talk about that. Let's go. So I don't want to waste here any time, guys. I'm going to show you directly what kind of money is coming in here. And it is confirmed that the money is coming in. It has nothing to do with liquidations. It has nothing to do with liquidity in the market. This is, so to speak, fresh money coming into the market. And the money is coming from FTX. Remember, guys, FTX, even though they collapsed as an exchange, they had enough crypto basically to make all customers whole, and they do it in cash. So people are not getting back their crypto, even though there is a pending lawsuit where people hacking FTX and saying, hey, I gave you crypto, I want my crypto back. I don't want your dirty fiat cash, go away with that. But regardless, the majority of people will get back whatever they had on FTX in cash, and that is $16 billion, to be exact $16.254 billion that they are getting paid back here in the creditor recovery summary as stated below. So now you have to understand, this is $16 billion that is sidelined, where crypto traders usually would have invested into the market, would have bought the dip, would have leverage traded, would have gotten wrecked, some of them. But this money is not in the market. Now imagine one day in October, November this year, this money is going to enter and you have $16 billion that are coming in at the same time. What do you think is going to happen? Of course, this is going to pump the market over a couple of days and maybe might crank up the engine in the market enough to keep us going higher and higher and higher. Now, there are, again, some time factors for today at least still running against us to prop the Bitcoin price up in the short term, because that is long term, guys. So we're talking about October, November, when the $16 billion are going to hit. They announced for Q4 that this will be the case. So here on the Wall Street cheat sheet, we have a little bit less than 14 hours before we are closing this current candle here. So I would like to see Bitcoin pushing a little bit higher to like $58,400 approximately. That would give us a really amazing wick in this candle and would also increase the chances of getting finally a confirmed green candle over the next 3 days here. So we can go and close that chapter and say, okay, bear trap is completed. Now it's time to go here into the up-only phase. Now it's time to go into the up-only phase of this cycle. Then the DXY. The DXY was dropping massively over the last couple of days. I still expect here the DXY tomorrow to drop a little bit further. I also want to show you that here is potentially coming in a little bit of support from this upward sloping trend line that should act a little bit as support. And also this upward sloping trend line could also give a little bit support. So maybe we get a doji candle here in that area by tomorrow. But then after tomorrow, continuation to the downside. Expect a small bounce from the 104.47 points level, because it was priorly here a support resistance flip zone. Here we broke it, came to the upside, deviated, but technically got supported. Also here supported, deviated below that, but here again support. And also there we broke it to the downside. Here deviation to the upside, came back down, resistance test, and so on and so on. So expect there's some support when we come down here. I don't expect that we are directly breaking through this, retest, and then goes, continue to move to the downside here. That's not how this usually works, you know. So we come down here, get a small bounce because here should be technically some support. Then after that, potentially after some sideways movements, we continue to go lower here and hit the target of that rising wedge pattern at 103.91 points on the DXY. It is really strange that the DXY went down and Bitcoin went and did not go up. So that is a catch-up trade that is also standing out. Just keep an eye on the DXY over the next couple of days because even though I don't believe that we are getting a big push back to the upside, we could chop a little bit sideways, and then I would like to see what Bitcoin actually is doing when we are not having black swan events and other factors hitting on the market. Another interesting chart that I'm looking at today is the CME futures chart. The current Bitcoin price is at, what price are we here? $57,638. So more or less around that price here. We closed Friday. Okay, if I take now the wick, we closed Friday at $57,065. That's where we closed. So there is a $600 gap between the Friday close and tonight's opening if we hold current levels. So expect that this will be filled really quickly if we get a fill. If we are not immediately getting a fill in the first 12 hours, I don't believe that we are filling this at all, and leave this here for the next bear market, in my opinion. That's what I believe. So this will be either filled really quickly or not at all until maybe potentially next year back into this level. If we come back down here, this will give you a great trading opportunity. I'm going to show you soon here again my trade and what I'm going to do with that, because on weeks, you know, guys, if you don't have a weeks account, go to the description and get one really quickly. I will set some limit orders here around that level when we come down to fill potentially the CME gap to basically add the money into the overall trade that I did not catch down here. Remember, I had an order at 52, never got filled. So I'm moving that money up here where the CME gap is. Just remember that CME and the spot market has averaging like $300. So the CME chart is usually $300 higher than the spot market. So if we hit $57,000, we're under $57,000 on spot. So just that you don't forget about this. So now Bitcoin on the weekly chart here also, again, really important today and really serious that matter that we close above the 21 exponential moving average here, above $58,250. If we are not closing here today, this weekly candle, then next week's candle has to close above it, and we can then consider this week's candle just as a fake out to the downside. But we need to be careful next week overall until we are closing next week's candle, if we are not closing today above the 21 moving average. Also here on the Bitcoin hash ribbons, I want to see if we finally put in a plot with a green dot or even a buy plot, because miners have definitely capitulated. And again, the global net liquidity is still going to the upside here. This will not change with this week's candle close. So you're just going to see that we continue to go to the upside. And that definitely also puts pressure on Bitcoin to continue to rise here into higher prices. Now, on the shorter time frames, I have seen here something really interesting, a fracture that I want to show you here in a second. Here on this correction chart, so we are now obviously 116 days already in this correction, the longest one of the cycle so far, and trying again to break above the downward sloping trend line that is giving us resistance from basically breaking it to the upside and potentially leaving this correction zone. Now, the fracture I want to show you here, before I show you my my trades again, is here on the daily chart. I have technically just taken away the length of the correction and here the red boxes. A fractal from early this year in January, how this is looking up here. This looks really, really similar. We also had a fake out here to the downside, the same under the downward sloping resistance line here, the same that we are having here right now. So, and if this fractal would repeat itself from here, this whole run to the upside, then we are really close to actually see that, and we should rise by next week back into the $60,000 area, and in 2 weeks we should see a nice pump to the upside. Give everything here like a 2 or 3 days extension or contraction, because they are not always playing out exactly as they did in the past, so you need to give a little bit room for movement there. But overall, this might be the pattern that we are looking at. And yeah, you need to understand that Wall Street and high frequency and algorithmic traders trading the same patterns over and over and over again, and that's why you can rely sometimes on fractures. I'm not saying that you can always do that, so you need to take other things into consideration, but in some instances, fractures actually playing exactly out again as they did in the past, more or less. So, and here, this might be the case. We're gonna find out in the next 48 hours, because in the next 48 hours we would break above this downward sloping resistance line, get a small push here close to $60,000, and start consolidating then between $60,000 and $61,200, and creating a bull flag, and then getting our next leg to the upside. So definitely something to watch out for. In terms of our trade here, remember guys, I told you, once the buy signal is coming in, that is the safe spot where you can open your position, but I usually do it a little bit earlier at the take profit point. And the buy tag is in just my confirmation to hold the trade. Now you see that was playing out quite nicely for us here on the MDX ALGO, what was it, scalp gradient, on the trend dynamic scalp gradient that I'm using here. Again, if you want this indicator, go into the description below. There is a link to the MDX Algo suite. It's amazing, as you can see. It's highly accurate, and now I can also tell you what's going to happen here next based on this. So look here how the color is moving from green into blue into purple red-ish. So here this red phase is missing, where we are technically in the short term topping out, and then we either get a cool down phase, or we are going back into a blue phase or a purple phase and continue to run in the red phase. So here I just want to show you this here. Look here. So here's what I mean, so green phase, blue phase, purple phase, purple red phase, up a little bit down, then back into red, cool down a little bit, push up. So that is something that we are potentially looking at here. And in terms of price movement, where we are going to, I believe we're going to hit here the $60,000 level, gonna get rejected from there initially, because here is some resistance. Remember guys, I showed you this yesterday. Gonna get a small rejection, go sideways, and then get a move into these supply zones up here. And just as you have seen, the fractal is also lining up with that. So now let's go to my trades here. So I'm still up $27,000. I think it's a little bit more than yesterday, $27,000. I want to remove now the order down here, the limit order. So I'm going to cancel this. And again, guys, I put my money where my mouth is. I believe we are going to like $56,800. And I had there, okay, $25,000. So $25,000 is what I want to place there. So you see, now I have here another order for the case that we are coming back down. And we'll have then my money completely allocated and have a $1 million multiple trades accumulating to $1 million worth in Bitcoin positions. And you see here $70,000 is the level where I want to get out. And I also have already put a stop loss on the biggest trade here. That is $17,500 in a profit right now. There I have a stop loss at, where's the stop loss here? at $55,600-ish, around these levels. And guys, don't forget, once again, if you want to trade on weeks, the link is in the description and in the pinned comment below. There I'm opening for the majority of the time now all my big Bitcoin trades that you can obviously follow me here on this channel. So now on the shorter time frames, on the 4-hourly chart, we see here the potential for a quick flush to the downside based on the liquidation levels that we are seeing here. Again, these liquidation levels are from the IMDX ALGO suite. I still expect first a move to the upside to retest the 50 moving average. From there, I would expect a small move to the downside. Could go all the way down to like 56 to liquidate here the over leveraged long positions and then push into higher price levels. I don't expect now that we immediately go here up, consolidate, go a little bit higher, consolidate, and the EMA ribbon flips in that side back to the upside. This is something that I don't believe. Best case scenario is that we come up here, only go back into the middle from the EMA ribbon, are able to hold the middle, then break above it, consolidate a little bit more, and then go a little bit higher. And in that moment, the EMA ribbon will completely flip. I would be already satisfied with a move here to the 50 moving average at almost $60,000, and potentially then also take already the first small profit on my trades. Now on the liquidation heat map, so even here on the last 24 hours, the positions that have built up here, the highest concentration and the hottest areas is still here the short side that should get punished. And that's another reason why I believe that we are going up here over the next couple of hours. So now on the 1 week chart, you're going to see the same thing, liquidity concentration to the upside. If it's loading, then look here how much liquidity is sitting up here. So there's over $20 billion worth of short liquidations just above us, and below us is almost nothing. So it makes not a lot of sense to push prices massively down in terms of liquidity, because all liquidity is sitting above us. Now, also here on the Wyckoff reaccumulation pattern, in the next 2 days, I expect that we are finding out if this is playing out or not. And if we are breaking here the support line at $58,300, which is acting as resistance, as you can see currently, once we're breaking above that, we know the Wyckoff reaccumulation pattern is playing out and that we are gradually going back to the upside. Also here, we bounced off perfectly the Fibonacci retracement level, the 0.5 here. Now indicators starting to align with a move back to the upside. MACD is showing signs to turn around. Stochastic RSI gave us a buy signal earlier, and also the RSI pointing back to the upside. And guys, don't forget, if you want to trade altcoins with me, we are going to look now at some of the altcoins. Then sign up on BYBIT. You still get $30,000 for using the link below here. Take advantage of that while the bonus is still available for everyone. I'm also trading right now on BYBIT. I'm actually logged in. Let me show you my positions here. No, okay, not logged in. I thought I'm logged in. But I'm gonna show them to you tomorrow, guys. Let's talk about altcoins. What's happening here with altcoins? Altcoins overall are still heavily oversold here based on the RSI here. Average is 35%. That is still oversold. So it's still a good moment to get into altcoins, in my opinion, right now, if you're looking for some good entries. Let's go to Ethereum. Ethereum is retesting here the $3,050 level. Again, remember guys, I told you this is really crucial to break. Only if we break it, I would consider opening a position if you were not able to catch it down here. So wait for that break here above the $3,050 level to enter, and then you can trade this at least into the golden ratio of $3,400, which is roughly a 13% move to the upside. Then FDM also under resistance here at the 45 cent level right now. Also here, once we're breaking that, you can enter. If you don't see a break here and we come back down to roughly 30 cents, then this becomes your entry. Solana. The Solana trade is slightly in profit. Remember I gave you that trade 2 days ago already. Here, I would like to see a little bit more continuation. The indicators are telling me that we get continuation because the MACD bounced off here to the upside, and also the stochastic is giving us a buy signal. in the middle, which is usually a sign of continuation to the upside, and the RSI overall is going sideways. Here again, the initial target, also the golden ratio, $165, and then $174 with that big resistance area. From there, we're going to reassess the situation if we want to continue to hold this trade or close it and find a new entry. Near overall also really strong here right now after a almost multi-month downtrend that we were in. Here I'm waiting for a retest of $5 roughly. $5.30. So if you're not right now in a near trade, don't enter here, guys. Don't enter here. It makes no sense to try to get into this now because we are here under really strong resistance, and only above $5.25 this resistance cleared. I know that is over 10% that you are missing out on, but the risk that we are getting rejected from this area here is just too big. So I'm already in a trade since $4, I think 17. So here on the bottom, that trade was open on Margex, guys. Also here, down below in the description is a link to Margex where you can actually copy trade me, and you don't need to complete any KYC for using that platform. So also definitely go check that out. And the same goes for Fairdesk. Also Fairdesk, I think I have here somewhere a link for Fairdesk. Forgot where it is, but okay, here's not a link for Fairdesk. I'm going to put a Fairdesk link also in the description, guys. So go and sign up on Fairdesk or on Margex for these kind of trades where you can just copy trade me. But anyway, here I would not open a trade because you're here kind of in no man's land. It makes no sense to open it here unless we come back to this trend line of $4.55. Or we are breaking $5.25 and you get a daily close above that level. That would be a confirmation that we are out of this bigger falling wedge pattern here, and would most likely go back to almost all-time highs here, at least to like the $8 range. That's where I'm trading this to. Then Injective also about to give a buy signal here on a stochastic RSI going sideways. Here I would like to see a lighter red candle on the MACD. Then you can technically still enter this, but here also you see there is a horizontal level that you need to take into consideration that we are kind of fighting right now with. So if you get a daily close above $19, let it be $19.40, I would consider to opening up here a small position. Don't put all your money that you want to put into this position directly into it. Take 25% or 50%, because if we come back down into the bigger entry level zone here, that's where you want to deploy the rest of the money that you want to allocate for that trade. So there's still a chance that we would come potentially back down here. Just have something on the sideline, and if we start breaking here above $22 again, let me put it this way: on the way up, you want also to add to your position, and at $22 you stop adding to your position. There you stop it, then you let it ride to like 28, 30, or even higher than that. So, but you don't add any more after the $22 mark. And guys, that's already for today's episode. I hope you enjoyed it. Make sure that you smash off the like button, hit the subscribe button, hit the notification bell, and I'll see you then again tomorrow.